What's up? All right, chat. It's time for the overview. Whew. Week number 8. We're getting far into this journey. We're too deep in now, chat. Too deep in. Freak. I almost didn't want to do this today because, like, just like personal things, nothing crazy, or like, because like right now, niggas is doing work and trading at the same time. So it's like work gruesome 12-hour shifts. This is not about me complaining or nothing. It's time to get straight to this journal. Continue to do what I need to do. Date October 10th, 2025. Market bias is bearish. High time frame context is this was the week we finally got away from all time highs and created a huge new week opening gap on lower time frames. We were still choppy. On the 1 hour and the 4 hour, we're expecting huge bearish gaps after the market crash. Subtype I want to see either NAS or ES claim London highs, and then we go back down towards the new week opening gap. Or alternatively, we could tap the opening gap of the new week and reject cleanly towards London highs, invalidating my bias but presenting an alternative setup. There's NASDAQ and ES. Took one trade, lost $525 loss. Story behind the trade was the market inverted a 1 minute PDI. Bro, this Monday was trash. Monday was straight buns doodle. As you can obviously see, we took this trade right here, this inversion. This was not clean. It just wasn't like it just wasn't good, chat. So emotional breakdown FOMO. Instantly intensity was 7, bro. Trigger seeing the market, seeing the chart inverse a 1 minute PDI towards London highs. Like it's this barely even a PDI chat, so can't even say PDI mostly. But during the trade was regret and it was a 10 intensity because I saw the charts completely disrespecting it because obviously that, in all honesty, that wasn't even like a good trade. So after trade felt deep disappointment knowing I didn't stick to my rules and only traded off of one confluence. Uh, Category bias in the market was D. The market didn't go towards the new week opening gap like I expected, as well as we've been bullish all morning. Execution was F. Bro. Didn't trade off of any obvious PDI, as well as I only traded inversion, nothing else. Risk management was A. Only risked 1%. Only took one trade. Psychology was a D. FOMO. While I waited for a setup, it wasn't good. I entered because I was tired of watching the market move without me. Setup was D. It was not good setup. Market was choppy with little spurts of volume, but it didn't present PDI that was good enough to trade. Confluences used was one inverted bullish FVG. What invalidated the bias was there was only one confluence saying the market wanted to go higher. The range was overextended, and there was equilibrium and a 5 minute bullish flat, fair value gap below, signifying that the market would want to claim the liquidity before going up. I don't know why. Well, I do know why Grammarly be sending it through as something else. Mistakes, FOMO moments too, focusing too much on making a trade as well as FOMOing into a trade that wasn't even worth taking, and I wouldn't be okay with losing. What went right? Although I would occasionally pull out my phone, I was able to focus more on the charts. Actionable lesson was wait for an obvious PDI with 2 to 3 confluences that signifies the trade that trade will be in your favor. Tuesday, October 14th, 2025. Market bias is bearish. High time frame context is respecting bearish PD arrays. Obviously, as we can see, moving towards that new week opening gap, or pretty much we like filled in. Subtype we are delivering from a PD previous day low. I would like to see us claim London session highs before continuing down. Risk per trade was 1%. Number of trades was 1. Win slash loss. P&L was a minus 401. We started accumulating inside a 5 minute bearish FPG, creating a lot of low resistance liquidity. ES claimed the previous day highs from previous highs from market open, so it was huge SMT, not huge but small SMT. While Nasdaq failed to, which created a small bearish SMT while we were resisting inside a 15-minute bearish for value gap right here. We closed and respected it. Then we created a 2 minute manipulation leg and inverse, creating the inverse for value gap PDI. At the same time, we closed on the 5 minute, respecting the bearish FBG. I guess at the same time we closed on the bearish 15 minute. This is what it's supposed to be, and respected the bearish FBG. I entered with my stop towards the manipulation leg to take my profits at the 5 minute bullish FBG right here. Emotional breakdown, confident was 9. Multiple confluences showing that the trade was well analyzed. During the trade was acceptance. It was an 8. It was like I would be happy with the loss because I traded using my rules and model and confluences I know. After the trade is technically negates that, but it was doubt. And 4, it was like constant losing. But this is more outcome biased. Process grade, bias accuracy was a B. On open, we were extremely bearish until the market claimed sell side liquidity. Execution was an A. Multiple confluences confirmed that the market wanted to go down even for a little. Risk management was an A, only took one trade. Risk only 1%. Psychology was a B. Was comfortable with the trade and my setup. I understood the risk and felt great about taking the trade. Although I continue to doubt my strategy because of the constant losses, even when I stack confirmations. Setup is a B. I enjoyed the setup. Whilst there weren't any major draws on liquidity towards the downside, I figured the market would at least retrace and then continue upwards. Confluences used were bearish SMT divergence, 5 minute respected bearish for value gap, inverse 2 minute bearish for value gap. What invalidated the bias? Lack of sell side liquidity since the market is rushing London highs. You can say there aren't any major reasons for the market to retrace. No FOMO mistakes. Lower right is I follow my rules. Trading on multiple confluences and didn't trade when I didn't see a reasonable setup. Actionable lesson. When there's lack of major liquidity draws towards your TP, don't trade because the market has no reason to retrace. Um, Wednesday, October 15th. My bias is definitely bullish. High time from context. The market is delivering from new day open gap to Monday's daily highs. Bullish PDA rates are being respected. Setup type claim previous day high and retrace the overextended range or retrace then continue upwards. One trade, 1% risk, loss, minus basically $600 in PDI. Story behind the trade was one minute PDI after the sweep with a 5 minute internal liquidity, while respecting a 5 minute bullish for value gap as well as a low time frame SMT because he has failed to take the low. This was a great trade, bro. Like this was A plus overall. And what we did was we swept again, then swept again, and then just skyrocketed straight up. Confidence. So basically, I can say here is understanding which leg is the real manipulation leg. I just liked how clean this V-shaped inverse was, but it didn't follow suit as we can see. Before the trade, confidence was an 8. Seeing a clean PDI inversion model. During the trade was acceptance of 9, multiple confluences signifying a reversal. After the trade was confusing, 5, because maybe I should have looked for a mech or a resweep of the low. Bias accuracy was a B. We retraced first, and now the market's heading back up like I expected. Execution was a B minus. Later on, it's doing what I expected, but I failed to identify the real manipulation leg. Risk management was an A. Stuck to 1% in one trade. Psychology was a B. Starting to feel lost on why I can't seem to find and identify the right setup anymore. Setup A. The setup was clean. I just failed to notice where to enter. Confluence was used as 5, 15 minute, and 1 minute FVGs, S&P diversion, bullish, liquidity sweep. What validated the bias? I can see that when we started the manipulation, like it swept all the accumulation of the buy side liquidity first. Then took the liquidity draw, making the PDI invalid, which then I should have looked for a MEC model. So what I meant by this is this spike up right here, claiming all of this, and then we manipulated down. My bias was on point as well as the reversal happened. I just need to signify the real manipulation leg. Actionable lesson: when both sides of the accumulation of PDR are claimed, even if it isn't by a lot, search for a different entry. As we can see, MEC model sweep inversed, and this would have been a clean 1-to-1. Last day we traded this week was Thursday the 16th, 2025. Bullish market bias. Let's go 1%. It was a win. We took a break even pretty much. Story behind it first was a mech. Market created a high time frame bearish SMT with NAS claiming previous day highs. It inversed 2 minute for value gap, and I expected to go to a 15-minute internal low, a 15-minute low inside of a 15-minute bullish for value gap. Break even at the swing low just in case of a liquidity sweep right here, as we did. Second pick, obvious PDI inversion. It was a 30-second inversion on ES after creating a low time frame bullish SMT off of a 15-minute internal low. Didn't have trader weight open, didn't see the 30-second. Towards a 5-minute unfilled value gap. Break even would have been at the end of the accumulation. So this one right here, this was beautiful. This is a great trade, but I didn't have trader weight open to catch the 30-second inversion. And then this was the MEC model. As we can see, we swept this high, inversed on the 2 minute. We don't see because this is the 1 minute, but the 2 minute inversed right around like here, as you can see. And then once we got in, we set our break even right here. Because if it swept this and retraced back up, I wouldn't want to be in no more. But I expected it to for a 1-to-1 towards this 15-minute internal low. Excitement was a 9, so basically confident A plus setup presented itself. Trade during the trade from 5 was the intensity. I entered on the A plus setup, but as we approached my break even, I wanted to take out what I made, but I stayed in the position and accepted what had come. After the trade, joy was a 9. I'm starting to understand my model. A few days ago, I had doubts, so it's still there, but it's like in the moment you feel more like you know what you're doing. This is overall a day. We obviously could tell risk bench moves on point, bias is on point, execution showed very well, psychology was there, the setup was there. Confluences we've seen 15-minute internal low, SMT divergence, bullish and bearish, FVG and inverse for value gaps as well. It invalidated. Bullish bias could have caused us not to hit TP. FOMO, no mistakes, set my plan, and then followed it as much as I could. Waited for an A plus setup. Didn't hesitate, managed my position accordingly. Wait for an A plus setup to present itself, and when it comes to trading, always have trader bay open because today you missed a great setup because of your mistake. The reason why I keep trader bay open is because like I don't have the premium trading view, so it's like trader bay allows you to do the 15 or 30-second without having to do all that. Then Friday we didn't trade. This would have been a great trade right here. As we can see, beautiful PDI we accumulated right here, or even you can classify this as a MEC. We tapped into a 1 hour for value gap, clean 15-second inversion and rejection off that 1 hour. Then we would have entered stop loss at the bottom of the manipulation leg towards another 15-minute intermediate high, claiming all this low resistance liquidity, especially with a bullish bias. So yeah, so we had an unfilled 4 hour up here that we wanted to claim and then continue downwards. So quickly trade and review template. Now we get into the nitty gritty. So this week we look over everything. So we know all the days, Monday through Friday. End up taking 4 trading days. Total trades taken was 4. Win rate was 25% because we took 4 trades and 1 break even, which classifies as a win. Average RR was 1-to-1. Net P&L was minus 1,500. Channel we're just down. Percentage of trades following the plan. 4 out of 5 days. Yeah. Max drawdown. We don't do that yet. Confidence average was a 6. Like this week was like a lot of doubts. Like even though we were confident in entering the setup, it's just doubt overall in the strategy, especially without the results being shown constantly or consistently. Discipline average was 8. The market this week was intermediate volatility, so it was slightly volatile, but the market also was stuck in its range since we're still in the shutdown. The strategy, it performed well on certain days, but this type of market, I would need to reduce my risk. And then our steps were aligned with the condition. Only Monday was trash where we FOMO'd and the trade was forced, and the rest of the days aligned. Most common emotion I felt this week was confidence as well as doubt, so it's like contradicting emotions. So it's more like confusion, like uncertainty. And then Friday I didn't enter on the 15-second conversion because of doubt in the strategy and the lower time frames since I lack that experience, which is shown in doubt. Confidence was when I show was shown when I executed in the days I've seen great moments to trade. Did you notice improvement in emotional control compared to last week? It definitely was better. Starting to build more confidence into my strategy because I'm collecting more data. Triggers that stood out was seeing an A plus setup brings a lot of confidence, fulfillment, and joy, and trust in trading and myself. So we're gonna start like just targeting only A plus setups. How quickly did you recover from losses mentally? It took 2 days, as well as seeing the days that my bias and setups were correct. Confidence level in your strategy is 7. Confidence level in yourself is 8. Entry this week was C. My entry timing slash where my setups were presenting itself is on point, but I need to understand when I should enter. P&L was a D. Constantly losing, causing my funds to come out negative. Setup was B. I'm seeing great setups and entries. Now that I'm gaining more experience, and market analysis is a B. Putting my phone away created a big improvement. Market analysis has improved extremely when putting my phone away. What constantly went wrong was entries, bro. Like entries is like been a big struggle forever, bro. Like it's like even when you find a model, you still gotta understand like by collecting data, what entries work the best for you. Um, Adjustments I can make is going deeper into understanding what trades bring higher conviction and success. Okay. The best setup was Wednesday, and then there was a great one on Friday, bro. Like both A plus setups. It showed I just didn't capitalize correctly. The setups that created the most doubt was when like they weren't clean, so like lack of volatility in the market, and multiple confluences weren't presenting themselves. And this week was more data driven, realizing A plus setups based on previous experiences. And then reoccurring mistakes was entering off setups that weren't clean. What worked well was analyzing the market to the point to where I see opportunities present themselves, and it worked because my mindset was on point, so that I put my phone away and was able to put my full focus into the market. What didn't work was entering on a bad setup and not entering on a setup that shows high conviction. It didn't work because I'm entering when I want to see a since I'm entering because I want to see a win so bad. I need to wait for the market to present a high quality setup that shows high conviction, and it's trash, bro. Since I'm entering these bad setups. Self talk change was very hyped. Forgot to finish this, but basically like more like okay, I'm in it for the long run, so why doubt? Um, yeah, I handled adversity better this week because I continued the week confident and showed up to the market every single day. What tested my patience the most was Thursday, moments where the market was reverting. I wanted to exit, but I stayed in and focused on the process. 7 overall with the week, and then I do still feel highly connected to the outcome. Not even gonna lie about it. Like I wouldn't be taking trash setups if I didn't. When the market, a lesson is when the market is slow and lacks volatility or is less clean, setups are trash and tend to fail. The rule for next week is when the market lacks clean movement, the setup isn't worth it. Then learning the market takes time. Lesson, continue to be patient when learning the market. Next week's primary focus is setup control and entry. Next week only take A plus setups, and when you don't see one, get off the market. Supporting goal, identify and execute a high conviction trade. And when you get bored, get off the charts. It's not even worth being on it no more. Only take A plus setups. In the week, you can get a nice dinner if you follow this goal. So this is just like a reward to show, like, okay, since you followed this, you know, continue to keep it up. So a short paragraph for this week was this week started off bad, but I ended up redeeming myself. I allowed FOMO. I allowed FOMO to enter and take control of my mind. I changed myself and started to find new ways to analyze the market. Found better entry points and setups, and I started to find A plus setups and started to understand what good setups that I should take. Overall, I'm starting to understand the market more. I'm finding more confidence in my model as well as my analysis. Overall, I'm understanding that this takes time to develop a high income skill. I need to continue to be patient. This week was indeed forced. not forced, but like speed ran. I just speed ran that. Cause honestly, chat, like I'm tired of shit. Like I need to go to sleep, but maybe that's his excuse. But since still did it, still doing it. Hopefully y'all took something from this week. This was speed ran, but hopefully y'all can see that I was still being honest in the journal, in the notes, and yeah, next week we'll come back stronger, come back better. I don't have to work as many days in a row, but but we will implement what I found this week to be hindering my performance into the next week. So yeah, that's it for this one, and I'm out. Peace.